Welcome back to Bloomberg Markets. I'm Shonali Bassick with Vonnie Quinn. And it's time now for our Wall Street Week Daily segment. Former U.S. Treasury Secretary Larry Summers joined Bloomberg's David Westin earlier to take a look back at 2023 and some of the predictions that were made about inflation. Take a listen.
We basically got an outcome that was closer to Team Transitory's prediction. Inflation came down with policy that is what their opponents were insisting on. Interest rates far beyond what they were recommending, far beyond what the Fed was predicting as of almost any date in the recent past. So the record's a bit ambiguous. Yes, absolutely, there have been important supply elements. I have always stressed that we never were an 8% or a 7% inflation country, that because of bottlenecks, a variety of prices went up, adding to inflation, and they would then come down, subtracting from inflation. I'm not sure we're really a 2% target inflation country in any durable sense. I look, for example, at the 5.2% wage increase the federal government just gave, at strike activity that's more than it's been in a decade, at still tight labor markets, at potential geopolitical risks in commodity markets, at the fact that house prices have really started to turn back up. And I'm far from sure where we're going to go on inflation. So to declare that proverbial soft landing to have taken place seems to me to be premature. So I think we're still in an ambiguous situation. I've been saying, David, on your show for close to a year now that there are three possibilities: that the economy turns down quickly, that the economy achieves the proverbial soft landing, and that in a sense we don't ever achieve a secure landing, and inflation never really gets down to target and even reaccelerates. And obviously, we didn't see the hard landing in 2023. I was never as sure as many people were that that would come because, as you also know, I've been arguing that neutral interest rates have gone up, so policy is not as contractionary as many people expect, and that the impact of interest rates are lower than many people have expected. So I'm not terribly surprised that we haven't seen a recession in 2023. And I think there are risks looking at some of the credit figures for the next while. We may achieve that soft landing. I'd certainly say it looks better and more likely than it did 6 or 8 months ago. I always said that soft landings were the triumph of hope over experience, but occasionally hope may triumph over experience.
Larry, one of the big developments of 2023 was generative AI, something you brought to Wall Street Week, actually back when ChatGPT was first announced. As you look at it now, and you have a role actually now in OpenAI, what are the possibilities for generative AI in 2024? What should we be looking forward to? What, for that matter, should we be concerned about?
David, I think this is an immense development. I think that there's a ton of uncertainty about what the timing is going to be. I'm not sure that it's going to be quite as revolutionary for productivity as we measure it, quite as rapidly as some people hope. But this is, people use the term general purpose technology. I can think of almost no area of human activity, almost no area of economic endeavor that is not going to be profoundly affected by these technologies. And I have no doubt that they are going to get substantially better. And here's the thing that I want to emphasize. At the early stage of a technology, David, people always think about how it can do currently recognized tasks better and more efficiently. But ultimately, it's the new tasks of which we have not conceived that is the larger effect of new technologies.
And finally, Larry, 2023 was a year of geopolitical strife. We started it with the war in Ukraine continuing. We added then the attack of Hamas on Israel and the difficulties that's raised in the Middle East for so many people. We have continued tension with China. As you look at the macroeconomics of 2024, how do geopolitics fit in?
The post-Cold War holiday from history is over. The world is once again a very dangerous place with the prospect of war between major powers. The way in which the United States has conceived itself in terms of national security is no longer viable. We are going to have to invest substantially more in all aspects of national security. That ranges from increased defense spending well above current projections to thinking about national security issues as we think about our educational system, as we did after Sputnik, to thinking about our investment in connections all over the world. The idea that we can rely on a growing spread of democratic, market-oriented economies to usher in a better world is no longer valid. And that makes for a much more uncertain and dangerous world with the possibility of geopolitics at any moment bearing importantly on markets than many of us have become used to. I worry about the possibility of conflict much more than I would have a few years ago. And I think that whether you're a student, a professor in a university, a worker in a business, a leader of a business, I think the idea that we all need to think about our country and its responsibility to keep itself safe and what it does in the world's capacity for the world's safety. I think back now to John Kennedy's inaugural about asking ourselves not what our country can do for us, but what we can do for our country, as again being a kind of theme that our leaders are going to need to strike and our people in business are going to need to respond to. These are very, very serious times, David, in a way that I think many who are alive today and have not really seen or contemplated.
Larry Summers, their former U.S. Treasury Secretary.